Traders, welcome back to our price action trading lesson. We're looking at S&P 500 mini futures again. And today's session started with a little bit of a consolidation, but there is bearish tilt right here in this market. We spiked down a little bit. When I'm watching structure like this, for the most part, it is going sideways, but I can see that there is slight bearish tilt. The first thing is I'm looking for some wider channel, but this feels a little bit too broad at the moment. We can reverse. So my thinking process is to see right now what's going to happen. Can we go below EMA? If we're going to have some significant push below EMA, I can then redraw some wider downtrends. Let's see what's going to happen. Okay, prices are breaking below EMA. We're back above and market continues to go lower significantly. Okay, this is significant push down. So this is a good sign right now that we are truly right now trading some form of bearish trend, because I can see consistent series of lower highs and lower lows. So as a price action trader, I always want to identify a pattern so I know what is happening in the market, where's the key entry point, and what is the structure. So I'm going to copy it. I'm going to connect all of these swings at the highs. You can see it looks like a downtrend working lower, very weak one, because the corrections are quite strong. But we have another new low. So right now, what is going through my mind is I'm only thinking about short opportunities only. I'm not even thinking about going long, because we have the big pattern established. Once the big trend is established, I'm only following the trend. That's how I'm going to make the most money. I'm not looking to counter and trade. We have a new low and I'm looking for breaks below bars, lows, and we have first entry short here. So we have first entry short, market is correct, and now we have a second entry short, new low, first entry short, pullback, second entry short. EMA held here. You don't have a new high for this uptrend, but you can see how far down you retraced. And this is the attempt. There's an attempt to test the new high. It fell because EMA right now is rejecting prices. And this right here is a solid signal bar, second entry short. We have the downtrend established. And this is a two-legged pullback. If it forms at the key entry point, this is first decent hyper setup for the day, second entry short. And the push phase continues working lower. In fact, the push phase was so strong that we have potential overshoot. You can see we broke the trend channel line, and this is why you always want to draw these patterns, these channels, because not only to understand where you want to sell, but it can give you insights about the structure as a whole. Because you broke the trend channel line, this means this is oversold area, and you can have stronger correction in the opposite direction. In fact, I also like drawing this one. The secondary channel looks pretty good as well. And even this one has overshoot. So a lot of channels right now have overshoot. We have a new low, first entry short, second entry short again, but you pushed above EMA. It is an inside bar. We can't take inside bar, and we had potential overshoot. So you can see many reasons why to skip it. We are not pattern traders. It's an inside bar. It's inside of this bullish bar. It's above EMA, and we had overshoot. And after overshoot, we skipped the very first, second entry. Okay, market is so bullish that I need to redraw a brand new uptrend working higher, something like this. And market keeps going higher, so this is confirming, okay, there truly was overshoot because there was such a massive rally out of nowhere. Let's see what's going to happen. At this point, I'm just going to let the correction play out. Let's see what's going to happen. Okay, you're breaking new high, but market continues to go higher like this. So at this point, we retraced too much of this downtrend that I'm not really looking to test the new extreme. I can use the Fibonacci only to measure the retracement. I'm going to measure the beginning, and you can see if I'm going to measure it top to bottom, we retrace over that 61.80%. So I'm not really trading Fibonacci. I'm just using it to visually see better, to measure the retracement. Once you retrace over that 50-60% mark, then I'm forgetting about new low for this downtrend. I'm no longer interested, and I'm adapting to new bullish bias. Okay. But because right now uptrend played out to break new high, I pretty much have no bias because everything played out. We're not going to get to new low because we retraced too much. Uptrend played out, two legs up. So now this is area of development. I need more information to work with so I understand exactly what is the pattern. Okay, this was interesting. This was felt second entry long, new high, first entry long, pullback, second entry long, failure after breaking new high. I didn't take it because, number one, it looked a little bit too bullish. You have not only pushed the new high here, but here again. So you have two pushes to a new high. And EMA held every single time. It looks too much like one push working higher. And also we pushed above EMA here a little bit. If you took it, not a bad risk. I'm not going to mark it. Feels a bit too aggressive, but you know, 2 legs up. It is a full second entry long, it is a reversal, so you may consider. I would prefer some second entry short. There was no second entry short, no nothing. Small break, push to new extreme. Downtrend played out, and we have massive push above EMA. Okay, I'm going to redraw small uptrend like this. Now, when I was watching this on a 10,000 tick chart, there was one wider channel for this leg like this. And now the channel played out with the push to new high. Okay, it's not really that obvious here, but on a 10,000 tick chart, this is why I like using high time frame together with this chart. It really looks like a one clean uptrend break and push to new high. So for this reason, I still don't have good structure to trade. What I can do, I can draw a small possible consolidation. We're going sideways. I can't really sell because we traded up into this and the range is just about to be established. This is not really a healthy confirmed trading range by any means. We just had a break new high for the first leg and this was just about to be established. You know what, I'm going to draw it so it's better to see something like this. So right now, still waiting area. We have some high low here, but it means nothing without a context, without a good key entry point. You're just going long right into these highs. This is a sideways structure, all uptrends played out. We have nothing to support this, okay? So we're not pattern traders. At the same time, I can really go short. And this is interesting because market right now bounce here again. So what I'm going to do, I'm going to divide the structure. And by the way, when I'm watching this live today, this was quite confusing. I wasn't even really looking for setups because this is all over the place. You have a consolidation here, push up, another consolidation again, something like this. So you can see this is just sideways structure with slight bullish bias. Not a fan of these structures as they are very choppy and nothing that clear. But right now you can see flat EMA, consistent price swings up and down. And this is interesting setup. We now have high-low confirmation setup. You can see you have double bottom here. So this small trend range is valid because you traded up, EMA is flat, and the support is holding. Downtrend played out with the break and push to a new extreme, and now you have a high low above EMA. Okay, so there is no bearish reversal, no nothing, especially since you have this double bottom. This is important. If I'm playing the initial trend range, I expect prices from these highs to go all the way down again. Why there is a brand new trend range established at the top of the main one? Okay, there's a brand new range established at the top of the main one. This is telling me that the structure is more bullish rather than bearish. This is a good setup to consider because it's a great signal bar. It's high low. I didn't take this setup and I don't think I would take it because this is just not my type of setup that I like to trade. It's too unclear of a structure, a little bit too sideways, but it fits price action rules. So I have to mark it 2 legs down, high low confirmation setup, great signal bar. Like I said, double bottom, you're going up. There is bullish bias. Okay. Now when I'm watching this, I have to explain why market keeps going higher. So when I'm watching this, I like drawing some bigger channel, something like this, but it feels a little bit too broad, but I cannot deny the fact that once again, why are we trending higher? Okay, we created consolidation here, but we're going higher again. So I have to zoom out and I can see series of higher lows, series of higher highs. So there has to be some bigger channel because market is just not stopping. We keep going higher. Even though there's a weak trend, we just keep going higher. Looks very rangy, slightly tilted up. So I prefer to get some confirmation. Okay, market is correcting. Okay, this is solid confirmation. This is visual. 2-legged pullback. This is exactly what we want to see. Very broad 2-legged pullback because the broader these 2 legs are, the more it is indicating there cannot be broader channel. The channels are not this broad. This simply doesn't make sense. Okay, this is ridiculous. These channels are incorrect, especially if they are against the main trend. So 2-legged pullback down, downtrend played out. So I'm thinking about high-low confirmation setup, and now we have another high-low. This is a good setup because it's confirming the trend. Broad 2 legs down. The signal bar is not the greatest, so you may use a limit order. It was a little bit better when I was watching this live before reloading my data. The tail here is really not that great, but you can use deeper limit order. 2 legs down, key entry point is holding, and now brand new push phase, which is confirming the bullish trend. So now we know what we are working with. We have this bullish trend established. So we follow the main bias, we draw these corrections, and I can only go long if the correction played out, and I'm at the key entry point. Okay, we're below EMA. So once I break below EMA, okay, I cannot take second entry long. I know I can't take second entry long unless it is perfectly at this trend line, and I need most likely a high low above EMA. I need something like this. Okay, we're pushing above EMA, so this is telling me, okay, brand new push phase may start, downtrend played out, price action is telling you everything, just like here, 2 legs down, downtrend played out, push above EMA is the resumption that the push phase is gonna start, and if I want to jump on this train, I need high-low confirmation setup, just like here, and similar to what happened here, you can see every single time I have 2 legs down and high-low above EMA. This is a sign that the brand new push phase is about to start. Can I get it? No first entry short, no trigger, there is no high-low. No second entry long, only first entry, so unfortunately no good way for me to enter. Can I get high low? No, market is just correcting lower like this. Okay, this is significant correction. Now I need felt second entry short above EMA. High low above EMA alone would not be enough because this is such a significant push down. We have first entry short, second entry short failure below EMA. However, I cannot take it below EMA. Just because the setup worked doesn't mean I can mark it and I can take it. I cannot, because it simply doesn't follow the rules. Okay, you just cannot go long below EMA. What if there's going to be some push to the EMA and then another push down? You just don't know. You need a push above EMA to understand and confirm, okay, the buyers are back in the market and now they're going to test the new high for this channel to the left. Okay, we're following the trend line. I'm going to zoom out. You can see uptrend, break, we're predicting the new high and we're looking for reasons to go long. We have another high low here, I didn't take it because I have small overshoot here and this push looked quite like a one leg. What if there's a new downtrend like this? So I didn't take it. I was looking for mini second entry long. This is what I look for when there is overshoot like this or this leg down is a little bit too steep. I want to see the mini second entry long, which came a little bit later, but the signal bar was horrendous. I cannot go long above bearish bar. If you took this high low, I can see the reasons. I cannot really say anything wrong about this. There are a few things that are making this more aggressive. I didn't take it once again. I want to see the mini second entry long, which on my chart, unfortunately, I had a bad bar. But the reasons are there. High low confirming felt second entry short. You need new high. So the context is on your side. Context always matters more rather than the pattern itself. By the way, this is why this high low here means nothing, because all uptrends played out and you are drawing potential trend range at the time. So context is super weak because you're going long at the very top of the range after everything played out. But here you have confirmed uptrend with many confirmations, a lot of high highs and high lows, and you expect new high, you're above EMA, so the context is stronger. Okay, breaking new high, uptrend played out. So right now I have to pause looking to go long because uptrend played out. That's a sign that I have to pause looking to go long. We're going sideways, we're breaking lower. Is there going to be a reversal? No reversal, back above EMA and another push up. Okay, so this is way too bullish. Market working lower like this. No setup, no nothing. Okay, we're breaking above EMA. Once I saw this push above EMA, this is where I zoomed out and I took a look at 10,000 tick chart, and on 10,000 tick chart it looks like there is additional spike in a channel pattern. I can see a lot of empty room here. It doesn't really look that structured, the entire push up. So if I'm going to take a look at 10,000 tick chart, I can see some better channel, something like this. Okay, you can see how nice it fits off of these highs. Not the easiest structure to trust, but it does look convincing, okay, because our initial channel has so much empty room here. Doesn't fit that well. Now the secondary channel is filled quite nicely. Once again, not the easiest structure, so I need more confirmation. Okay, market is working higher. There is no setup really here, no nothing. We created push to a new high. Okay, so I was thinking that the uptrend right now may finish, but notice what happened. Market continues to rally higher like this, and we keep going higher. So this is difficult area because after all uptrends played out, if I'm going to draw a little bit wider one like this, it has overshoot. It now would have overshoot. So I just need to be patient because all uptrends played out. Yeah, we keep going higher. Okay, we're back above EMA. I don't see no setup here. Another push up. So okay, it is looking like we have a brand new trend established. Okay, when the bias is super strong and the trend is very, very strong, it looks like there's a brand new trend established after our initial channel played out. This doesn't happen that often. It is quite rare. It really doesn't happen that often. but it can happen once the push to a new high is so extreme and is so significant and market just cannot be stopped. There's a brand new trend established again, because if you're going to really zoom out, you can see some bigger channel overall. You know, you have potential double trap here, double trap right here, downtrend played out. You can connect these swings, draw a channel like this, the best fitting channel, quite empty room here. You know, you can consider double trap. It's a stronger setup than a second entry long. Gonna redraw the downtrend working lower. Okay. You have a second entry long, new high first entry long, second entry long, which is new low, first entry short pullback, second entry short failure. So it's a double high probability setup in one. This is always stronger than just a singular pattern. This is a decent setup. Second entry long, opportunity new high, the bias is so bullish. The only thing about this structure is that you just cannot find the best fitting channel. Maybe this one doesn't fit that badly. You can see it fits pretty good, but it was not easy to find the best channel because market is printing new bars and you need to locate the best channel. But you know that the bias is bullish, you know that the market just cannot reverse. Once again, break new low and you're back above EMA. So this is a decent high probability setup. Second entry long. It's getting a little bit too close, so this is probably the last trade for the day. And market just keeps going higher, and now the market is about to close. So this is the overall structure for today. Quite a unique day because you have the uptrend working higher, and then instead of breaking new high and a correction, you have another continuation. This doesn't happen as often, so you need to make sure you're going to wait for more confirmation. And you can see there's no reversal back above EMA. Once again, no reversal back above EMA, so you can consider buying after you get some confirmation. But I hope you had a good trading day. I'm going to wrap it up. I'm going to talk to you next time. Good luck in your trading.